is Ken Kraetzer for CBSI Services and our interview series, CBSI Talking Business. We talk to leaders in the field of digital marketing, banking, insurance, customer service, and business education, all to highlight the great work of our team at CBSI. We're in Harrison, New York, and we provide insurance-based benefits to the credit card and payments industry. Now, today we are really pleased to talk to really a leader in community banking from upstate New York, but has served in national roles, and that is John H. Buhrmaster, President and CEO of First National Bank of Scotia. John, how are you today?
I'm doing well. Thank you. Thank you for this opportunity.
Hey, great to talk with you. I mentioned you served as the national chairman of the Independent Community Bankers of America, also a proud Syracuse University graduate. Maybe to start off, how's the year been for you, your institution up in Central New York, and your customers?
Well, frankly, it's been a good year. We have a fortunate problem in that we've got a lot of deposits to lend, and we are blessed that business is going again. People are building, people are buying, so we are seeing some of that money flow out. Our lending business is booming. We'd be financing more cars if there were more new cars available. Normally, we have a very large indirect lending business that's through the dealerships, and we've had that for decades. We're usually financing about 40% new cars, 60% used. It's more like 15% new and the rest used. It's hard to get a new one.
That's a big trend in the automotive industry, lack of availability of parts, especially computer chips that go into cars. Hopefully that'll be remedied very soon. Now, tell us a little bit about how your bank reacted to COVID last March. Employees had to change how they where they worked for a lot of institutions serving customers, and then being able to help customers, especially small businesses, with the Paycheck Protection Program.
Well, one of the things that we've always prided ourselves on is the cross-training of our employees, and the fact that we always have contingencies upon contingencies. So when we saw the pandemic approaching, we back in January of 2020, we convened our business continuity team, and we began working on options. This was something that was going to hit us. We felt comfortable. When the time came, we jumped on it. We were the first in our area to close our lobbies and start sending people home, working split shifts. Our drive-thrus became very busy. We kept one team home of tellers and the second team in the office in case people got infected. But it did not affect our customer service. Instead, people went online, people went to phones, people went to our drive-thrus, and if they needed to get in a safe deposit box, we had precautions so that they could get in and be safe. We focused on keeping our employees safe, and therefore they focused on keeping their customers safe. If you don't feel comfortable in your job, you're not going to do it well. So we went out of our way to make sure that we had all the precautions.
Very good. And do you find from the service delivery that you shifted to during COVID that you learn new ways of serving customers that you're going to utilize going forward?
Yeah, there are several great things that happened from that experience of actually running our business continuity plan. It was a sad situation that got us into it, but because of the pandemic. But we've had all this stuff on paper, we've practiced it, but when we had to execute, I was amazed at the resiliency of the staff and of our customers. We've in the first weeks of the pandemic, we added 4 new technologies within a couple weeks, one within 4 days, so that we could continue to assist our customers, our business customers, our individual customers, with their needs remotely. And it showed that we had the infrastructure in place. I mean, some of these products that we hadn't been languishing for years, hemming and hawing, and is there time to do it? And at that point we said, no, we're going to do it. I need it by Friday. And it happened. And those products that we added, plus the other procedures that we've put into place, leaped us forward in our technological abilities to serve our customers. And that has not stopped. That is going to move forward. It gave our people confidence that they can add new products quickly instead of taking a year-long process. We went through it with our regulators. They came in afterwards and checked and saw what we did, and we followed all the rules, and we were safe and sound in the way we applied the products. Now we have really seen a fundamental change in how our customers do business. They don't need to come into the lobbies anymore. They're coming through our drive-thrus. Our drive-thrus have become more efficient. We used to encourage business customers to come inside, but we don't anymore because we're more efficient. We're scanning documents that we used to just put in a drawer and deal with later. The transactions are faster, inside and outside. We've had to adjust our marketing. Everybody who's been into a bank lobby knows that you get asked about a product. Well, if you don't have people coming into your lobby, you're going to have to figure out something else. Social media, direct marketing through phone calls to customers, more like well-being calls to the customers, and informing them that, hey, if you're not able to get in the lobby, it's okay. These are the things that we have to help you, both small business and consumers. Along the way, we had our staff also doing the PPP loans, and we were literally going 24/7 with that for the beginning of April last year. And there was such a demand. It was free government money, and everybody wanted some of it. There wasn't enough to go around, so naturally you're dealing with your existing customers first. We're fortunate that we had available resources to help non-customers as well too. So it taught us a lot about ourselves, and it helped change the way we address reaching our customers, and that's going to stay.
And how do you feel your region in upstate New York, not far from Schenectady, is doing recovering? Do you find the small businesses are able to get back to where they've been, and the restaurant and travel industry, how are they doing in your region?
Well, we're fortunate. We live in an area that is somewhat insulated from the real highs and the real lows because we have a lot of government employment, and we have quite a few colleges and universities around. So that does keep employment steady. But the small business sector was volatile, and we did see a number of restaurants fail and close, but not for lack of trying to help them. The banks in the area, the community banks, came out in droves and were working to save businesses. Our delinquencies are lower than they were before the pandemic right now. We have not had any losses related to the pandemic, and it's because of our ability to work with them on a customized basis. So the economy around here is doing pretty good. Plus, we're near Saratoga Springs, and our hospitality area, our hospitality business in the area was hurting. But now that the track is open at full capacity, it's going quite well, and we do expect it to continue.
Well, I'm sure everybody's looking forward to the thoroughbred racing season up at Saratoga. I enjoy the golf course. There's a beautiful Saratoga State Park golf course that's a delight. And tell us a little bit. I want to just ask you a little bit about the history of your bank. You evolved serving the General Electric company nearby and the industry. Tell us a little bit about how your bank was founded and has grown over the years.
Well, my great-grandfather was one of a few businessmen in the village of Scotia, in the town of Glenville. that felt the big bank across the river was not serving their needs that well. So they got together and formed the Glenville Bank, which is now First National Bank of Scotia, although we retain that Glenville Bank at our holding company level. And they immediately reached out and tried to use the best technology possible at that time. That has continued to this day. We've always reached out. We've always tried to see what's going forward, and probably it's related to our proximity to the home of General Electric. The city of Schenectady was the city that lights and hauls the world. We had on one end of Erie Boulevard, Alco, American Locomotive. You probably heard about the big boy that's touring, big boy locomotive touring the country. It was built right here in Schenectady. And on the other end is where Edison started General Electric. We've had a long relationship with General Electric. GE was, we did their payroll. We were their local payroll provider when, in the 30s, 40s, and 50s and 60s, when their headquarters was here in Schenectady. When they moved their headquarters to Connecticut, employment and the relationship changed. But it evolved into something different for us in that in the early 60s, we went to General Electric, or they came to us actually, and they were going to get into the bank servicing business. So we went online in 1962 or 61 with our passbook savings. We eliminated the passbook accounts in 1962 and issued statements. And immediately after that, we went to checking accounts, and we stayed with them as our core provider until they decided to sell the business in the late 60s. And then we went in-house, and we've been in-house ever since. So we've tried to stay ahead of the curve. Now we have a relationship with General Electric. In '87, we kept our kept close. They've had their global research center here since Edison founded it. It's in Niskayuna, which is a suburb of Schenectady, and they asked us to come and do some cashiering for them. Dr. Walt Robb, he asked us to put a branch in up there. It's a full service branch located in a closed facility, and we still maintain to this day a very close relationship with the research facility.
Very good. Now, it's got to be a challenge for community banks, smaller institutions, to keep up with the technology level of the global banks and the money center banks, especially in this era of growing acceptance of digital banking. How do you approach that? I know you look at some outside resources to bring in where you can. How do you approach keeping your technology level so your service delivery meets the expectations of your customers?
Well, it's changed over the years, as we all know. Back in the 60s, it was a little slower. The expectations were a little slower. In the 80s, they started to pick up. Now in the 2020s, people expect instantaneous change. When they see something they like, they want you to have it. And we've kept that attitude in management that we've got to keep pace with customers' expectations currently. So as new products come out, we evaluate them and determine whether to add these products to our repertoire. Myself, I got my degree in management information systems and marketing from Syracuse, and I was going to do something else. I came here for a summer job. I'm still here 35 years later. But it's influenced my my thoughts on the technology. I've expanded on my grandfather and father's thoughts, and I've become involved in the Venture Center. Is a fintech. They've got a Fintech Accelerator in Little Rock, Arkansas. Yeah. Through both ICBA, our trade organization, and FIS, Fortune 100 company, and we use that to really prospect. And I use it to learn about the new technology. My staff attends and is involved, my key staff here, and they learn. And we're trying to keep up with products that will improve the customer experience and improve our efficiency and our safety and soundness. I'm proud to say we've probably, over the 6 years that I've been involved with that program, I think I'm on my 9th cohort right now, we have added probably 6 or 7 new products, and we've got a few in the hopper. These are small products from fintech providers that give us just a leg up in some areas, allow us to save on staffing, not having to add new staff, but also allow our customers to see new and improved services.
Well, we appreciate that you introduced us to the Fintech Accelerator program at Little Rock, Arkansas. We're going to follow up and learn more. What would be some of the, and I know you've been an instructor in that program, what would be some of the topics that might be covered in a program at the Fintech Accelerator?
Well, my job, let's talk about what the Accelerator is. The Accelerator is a 12-week program that a company that is in the beginning stages or approaching market or already has some small market, they want to reach the financial services community, but they don't necessarily have all the tools and skills. So they go through a 12-week intensive boot camp program that is in person. It will be going in person again in the near future, but they went virtual and it's still been successful. We talked to them, bankers like myself and others, about what are the needs of community banks and what are the needs of our customers, really. In general, they have to understand that they may be selling to us, but we're selling that to our customers. And we help them understand the market. We help them see the pitfalls others have gone into, because I've been dealing with fintechs since the beginning of my career in the 80s. I have always wanted to look at new companies. In fact, when we got our core software, it was from Georgia, and there wasn't anybody north of Virginia using it. Now it's been bought by FIS, but we look for the best product, and then we analyze the company to make sure they're financially sound and the character of the owners and the managers is stable. And we've been quite successful without failures of the small companies we've done business with, to the point where so many of them end up getting bought by big companies. But I think it's important to let these folks know that they're dealing with a different kind of market. They're not selling to Bank of America. They're selling to a community bank, which is a small business.
Absolutely. And one of the roles that you have served is the National Chair of the Independent Community Bankers of America in 2014 to 2015, which means you did, in top to running your banking organization, you did a lot of work at the state level to gain the attention of the national organization, who asked you to do even more work. What was that like to represent your organization on a national level? I know it means a fair amount of time in Washington, D.C.
Well, as they say, you do a good job, you get asked to do more. My grandfather warned me about that when I was younger, and my dad reiterated it. And then when I got asked to be chair, my dad said, "See, I told you so." Keep working hard. You really don't think about yourself. You think about the mission and the others that you're working with, and it gives you opportunities to do well. This was not about our bank. This was about the industry of community banking. And I was honored to have been asked and to serve as chairman of ICBA, the only national trade association for community banks. It gave me the opportunity to really influence leaders, policymakers, and communicate directly with community bankers all over the nation. I traveled to 40 states and spoke in 40 different states at either conventions or other events that they had, met with leaders both here and abroad, talked about the things that matter. Some of the things that we talked about in 2014 and 15 when I was chair, they're still on the table. Some we have solved and we've had successes. So for me, it was humbling, but it was a duty. And I cannot say enough about the character of community bankers throughout the country. If somebody's watching this and they're not happy with their banking relationship, go to a community bank. You've got the best people in the world running and working at those banks.
Absolutely. Now, one of the topics that came up at the ICBA Capitol Hill Day, and it's been a topic in a number of banking conferences this year, is how to better serve the underserved banking market. People who do not really are not part of the financial system, haven't had access. pay a lot of money to have paychecks cashed and trying to send funds back to families. And I know your organization has some initiatives there. What are some of the ways that the underserved banking market can become part of the financials, can receive and benefit from financial services?
Well, I believe very strongly in reaching out to these markets. First of all, we need help from the FDIC in loosening up the standards so that we can get back into the business of building new banks. You know, building new banks is how you reach some of these underserved areas. And there are people in those communities that want to open a new bank, but the standards became nearly impossible. There were hundreds of new banks before the 2008 crisis, each month, and now it's pretty rare to see a new bank. That is a great way to help. But some of the other things is you need outreach. Community banks are judged on their outreach through CRA, but actually CRA really is not why we do it. It's because why we were founded. My great-grandfather's founding reason was because the big bank across the river was not serving our community. At that time, the village of Scotia was an underserved community, and we did not get the banking services we need. You need more people like that to move to those communities. Now we also reach into the school systems in some of these areas, and we do financial literacy. To me, that is the root of what some people call the wealth gap, what some people call the trust gap. We need to promote education throughout schools and in the community after people graduate from high school and possibly college too, so that there is trust between the financial industry and the underserved areas. I think the biggest problem we have is something that we call the trust gap, that some of these folks they're getting their benefits on an EBT card, an electronic benefit card, like an ATM card. They don't need a bank. Their money comes on a card. So we need to give them reasons for a bank. And one of those reasons is saving for a rainy day. Because as we saw through this pandemic, people were short money, and the government came up with some funds. Now, in our state, it's been very difficult to get those funds out. Other states have had more success. So we've worked hard working with local and national leaders in both the nonprofit and the political worlds to speed up the rent assistance, the foreclosure assistance. In fact, we've developed a volunteer program with other banks in the area, which we're running, that will have people answering the phone at one of the counseling services, the City of Schenectady Counseling Service called Better Community Neighborhoods, Inc. And they are going to be helping assist get people back on track. These are ways to bridge that trust gap. Once they meet you and see you, it's good. And plus, working with the nonprofits and the churches. Doesn't matter what faith. Working with church groups, people will tell their pastor way more than they tell their banker. And if somebody's in trouble, they're probably not going to tell their banker, but they may tell their pastor, who can get them help.
That is an important thought, and the outreach that you're doing on financial literacy is so important and good to hear. And we were following actually a global conference last week, Money 2020, Money Fest, and they had leaders in banking from around the world talking. And one of the real topics they were talking about was embedded finance for both banking products and insurance products. And when they got, and this for fintechs to offer, but the more detail I heard, gosh, it sounded a lot like co-branding of credit cards, the airline card programs, all of the affinity card programs, and private labeling that retailers have used to offer credit to their customers for decades. You know, what comes to mind? You're an expert in fintech. You're investigating when you hear the term embedded finance.
Well, it's exactly one of the things we're trying to teach these folks in the accelerator, is that if you provide a white label product so that my bank can issue that product with our name on it, you immediately build a market. Your market is there. Similar to TWA working with Chase years ago to have a branded card. You know, Chase was the bank behind it, but it had a picture of TWA in it. Now I have a Southwest card with Chase behind it, and those they come with a predetermined market. So you're reaching people. I mean, I keep on my desk this empty candy jar from 1967, from when my dad went down to the World Trade Towers and met with Bankers Trust, and we began our credit card program same way Southwest does, as our name on the card, yet Bankers Trust was running it behind. So we've been in the credit card business over 50 years. More than half of it we've been doing as co-branded. But I think the success of some of these fintechs is going to be ingraining themselves in with the banks. I think it's a great trend.
Absolutely. Our founder, Bob Conti, will have his own Bankers Trust story for you one day. One of his early clients, and one of the things that our company was founded on was insurance marketing with banks, first in life insurance sales to individuals and groups, and then we had the opportunity to support credit card issuers with group benefit products. And it's always been a question, how can banks market insurance? That was one of the reasons for the GLB regulations in the late 80s that came out to be able to give banks more freedom to market insurance. But I don't think it's really happened. What are your thoughts? How do you approach insurance marketing for your customers?
Well, our bank has been deeply involved in the insurance business for many years. In fact, I was named John H. John H. was the first and middle name of both my maternal and paternal great-grandfather, and they both were in the insurance business, the coal merchants business, and up in Appleton, Wisconsin. And so our bank had an insurance agency from the 30s, 40s, all the way through the 70s, and then it outgrew the regulation. It had to be in a town of 5,000 or less. We did very, very well with the Scotia agency during those years. When Graham Leach Bliley came out, we went after it, and after quite a few years, we did find an agency. And it is tough to market to your customers. Right away you think, well, I've got 12,000 car loan customers. I should be able to get 6,000 insurance policies. The best way to do it is establishing a trust between the customer and the bank, that if the bank recommends something, they're going to take it. We've had credit life insurance for many years, and we've been very successful because we don't talk to them about paying the car off because it's good for you. It'll pay your car off because it's good for your wife or your child. So they're not left with the responsibility. And then we have success stories that we're able to circulate. So it's something we believe strongly in, that banking and insurance can go together. It just takes a little bit of work, but it's well worth it for your customers and for your balance sheets.
Yeah, that brings up the whole question of cross-sell opportunities. I worked at Dean Witter when it was owned by Sears, and it had Allstate Insurance and Coldwell Banker Real Estate, and American Express when it had Shearson as a brokerage company, and could and the whole idea was to be able to eventually cross-sell. And then the thought was, well, gosh, on a Saturday morning, a lobby is a pretty good place to be, as everybody came in to deposit checks or to make withdrawals. But that's kind of gone away. How do you cross-sell products now when you don't see your customers often face to face?
Well, it is hard, especially now that we're in the post-COVID era, where our lobbies they're not empty, but there's not the people. You can't rely on your tellers. You can't rely on your platform people, the ones taking the applications or opening the accounts, because a lot of this is being done over the phone or online. So you really have to focus on knowing your customer. customer. And that's where data comes in. You're going to see a lot of talk over the next few years, and I'm sure you have, about big data. Well, just because they call it big data doesn't mean it's not appropriate for a community bank. We know our customers. Our data is different than a Chase or a Bank of America. Our data is more personal. We have intellectual data that we have in our heads that we know our customers. And also we have their information that we're doing a better job now of pulling. So we can send someone a quote on their car insurance a couple months before the anniversary of when they bought their car, because chances are that's when their policy expires. So we've gone to direct and customized mailing and phone calls and social media in order to provide the services that we used to provide over the teller window. It's harder because it's new, but it will become the new norm. And any bank that's not taking advantage of the data, you don't have to buy a $100,000 program to do it. You just have to use the assets you have, which are your people and your customers and what you have in your system already. That'll give you enough that you can maintain your cross-selling without having to hire somebody at a 6 or 7 figure fee.
Yeah, well, you are really bringing innovation into your organization and really taking the effort to go out and learn the new technology, fintechs, and what's going on and options. And we're so glad to have a chance to talk with you today. Tell us, is there a final thought you have for us? It must just be great to see businesses reopening and the travel entertainment business getting back to where it should be up in your region.
Well, I think if I leave with one message is that when I came to the bank as a teller, I really wasn't sure. I'd seen my family operating the bank for years, but I had never actually been in it, except for maybe in foreclosures, sweeping them out, or scraping jujubes off the floor of a movie theater that closed. So I didn't get it. After I spent some time here, I get it. Our job is not money. We don't sell money. We make people's lives better. That's what a community bank does. And the community banking industry is strong because that's what we do. And we were the economic engine that provided the PPP funding during the tough times. We got personal with these small business owners, and anybody doing business with a community bank had a far better chance of survival than those doing business from afar or those who chose not to have a banking relationship. So my message would be, those listening, if you don't have a relationship with a community bank, get one. Take a car loan, take a mortgage, open up a business account. But we're going to be there when you need us. We're there for life's challenges, and we're there for the good times too. We're going to be there.
Well, you are such a good advocate for community bankers around the country, and as I said, you served as chairman of the Independent Community Bankers of America. You said you traveled to 40 states representing and leading bankers across the country, and of course in Washington, D.C. First National Bank of Scotia, you're the president and CEO, and also a proud graduate of Syracuse University. You see that basketball you have in the background there. John H. Buhrmaster, great to talk with you today.
Great to talk with you too, Ken.
I hope we can do this again soon, and have a great rest of your summer. This is Ken Kraetzer for CBSI Services. We're based in Harrison, New York. We provide insurance-based benefits to the credit card and payments industry. I'm in my home office today in White Plains, New York. Thank you for watching. Have a great day.